When you consider the EV race, which of the Japanese names has got the edge, James, and just how material is it proving in revenue terms?
Right. Well, that's a very good question, but at the same time, we haven't found a strong automaker in the EV space among the Japanese. But we believe that Toyota has doing a lot of things behind the scenes, such as securing some of the key materials and the building the capacity. So we believe in the longer term, Toyota will catch up. However, for now, it seems like all Japanese automakers are kind of behind the race, as many of their competitors globally is launching like third generation battery EV models. When it comes to the raw material side, as we see in Tesla, the pricing strategy of EV works slightly different than that of the internal combustion engine vehicle. And then many of leading battery EV companies, such as like Tesla or Hyundai and Kia, has already raised the price up to like 15%, which we believe is good enough to cover the cost hike, which should be around 10% on the material side. Internal combustion engine side might be slightly different, but we are quite confident that the EV side, and it comes to at least come to cost side, it will be fully passed on to consumers at current environment.
James, would you agree that, for the Japanese auto names, if, and I stress here, if the bulk of their production had stayed at home in Japan because of how weak the yen is, that would lead to obviously much higher import costs, which are already high enough, right? But in this case, I mean, decades ago, they onshored to be as close as possible to their biggest markets, the U.S. obviously, also China, but yet they're still not able to avoid the pinch from higher raw material costs and supply chain kinks. Do you think the most vulnerable would be a name like Suzuki, the mini car maker, because they're the least onshored of all the names?
I think for the all automaker, the direction is quite clear. Everyone to be onshore so that you minimize the impact of excess volatility. Plus, you actually is closer to where your clients are and understand their appetite, right? So for Suzuki, I guess the biggest issue for raw material, when it comes to raw materials for Suzuki, is not being less onshore or being offshore. It's about the product being low ASP product and operating in the emerging market countries where you have less spending power compared to those of, say, U.S. consumer or developed market consumers. So for Suzuki, the difficulty of raising ASP has been the key issue for them, and that led to a squeeze in profitability. And that actually happened outside India. We're actually seeing pretty good, nice ASP hike and demand in India, but other regions, other their operating regions are quite in a tight situation at the moment.